Let's stick with the Fed. Joining us now, former Dallas Fed President Richard Fisher. He's also a CNBC contributor and an advisor to Jefferies. And Richard, great to have you on to weigh in here. So Chair Powell yesterday, he said, hey, the economy's still in good shape, yet the labor market is actually cooler than it was in 2019. Said inflation's come down a lot. It looks like it's going the right direction, but there's less confidence on the committee that it's going to make its way down to target. So there's a dissonant message in there. The market's a little bit confused. How does it shake out to you?
Well, I think you just have to look at the circumstances at the time and adjust accordingly. The dot plot and the SEP, as it's called, the Survey of Economic Projections, is a very imprecise way for the markets to be so dependent. And I gave a speech on this in New Orleans when I was at the Fed in May of 2014. I'm going to read you one sentence from that speech. What it says is, I want to caution you, the audience, the markets, against becoming overly preoccupied with the FOMC's SEP. And I called it out, damn dot, after Dr. Seuss and Macbeth, by the way. But in that speech, and I think Chairman Powell has said this over and over and over again, these are not locked in. These are the best guess at the time. And I marvel at the fact we have a futures markets in dots. It's just the markets become overly preoccupied here. So they're adjusting to current circumstances. And the other thing I remember well, Ben Bernanke says, it's not what we do, it's what we say. And what has been said now, either projected through the best guess, which is the dot plot that just was released, revising what they thought as their best guess in September, and listening carefully to the chairman, they're stating what they're actually thinking. And I think it's an honest way to project yourself when the chairman gives that talk, to give a little forward guidance, but it's an imprecise tool. We developed the dot plot in the SEP because we were trying to provide forward guidance back then numerically and date-wise. It didn't work. So again, it's best guess. I think it's best for the market to keep that in mind.
But completely take what you say. And of course, as you say, Chair Powell's often tried to de-emphasize the dot plot as any kind of a precise intention of what's going to happen. But what it does reflect, and this is inevitable perhaps as the market, as the rates get toward neutral and, the economy kind of evolves, is that there is a pretty wide spread of expectation of what the neutral rate is and how fast the Fed might be able to get there and whether inflation is in hand or not.
Again, monetary policy is not mathematically precise. And I marvel at all these analysts that think it is. It is 19 people led by a chairman, one of the 19, just doing their level best to provide a monetary policy that doesn't overstimulate or understimulate the economy or create inflation or disinflation or deflation. And again, these are human beings. They're not models. They're not computers. And you've got 19 what I consider to be, I used to call, are wise owls. They're not hawks nor doves. And they're just giving the best they can. But there's no precision to this, Mike. You have to understand that. It's judgment. And you have all the models in the world, et cetera, and you know exactly what the Fed funds futures markets are saying, et cetera. But in the end, you sit at that table for 2 days, and as you build up to that meeting, you're providing your best judgment. And it's no more than that.